You ready?
Yeah, let's do this. Hey everybody, Brie Milani with Sky Insurance Brokers on another episode of the Greatness Podcast. And today I'm super excited to have Matt Miller on here with Mason-McDuffie Mortgage Corporation.
Well done, yes.
Yes, we were like talking before and I'm like, let me make sure I say it correctly because he was saying there's a Mason-McDuffie that's real estate, so not to confuse the two.
Correct.
So nailed it.
Nailed it.
Thanks for coming on. I'm super
My
excited
pleasure.
to have you here. I know we grabbed lunch a couple weeks ago and I'm like, hey, would you want to try out this podcast thing and see if you're interested? And super happy to have you on because I know we talked a little bit a few weeks ago, but I really didn't know a lot about you until we got to sit down and have lunch. So
It's funny. I've gone back and had lunch there twice since then.
oh my gosh, we went to this sushi place that like it has this like round table thing that it just like shows up to your table. It was amazing.
Grabbing the plates was the hardest part, but once we figured it out.
Yeah, I almost broke it a few times, but it was awesome. So as we talked, obviously, I know a little bit about you. You've been in the industry for a little while, and you have, talk about your family, talk about your kids, your wife, and all of that good stuff.
Lucky, to have healthy wife and children.
Yes, amen to that.
My daughter's a senior, so she's the youngest. My son is going to be 22 and in college, so almost empty nesters, which has also become a different pivoting point in my career where, it was nice to be in this industry, to be able to take some time off and be with my family and coach my daughter's volleyball team for years and go to all my son's practices and be able to do those things as a parent, which just meant that, in doing my job, I was up until 2 a.m. or getting up at 4:30 in the morning to
the sacrifices.
Do that, but then still be able to be the carpool dad and do those things. So really it's one of the joys I've had in this industry is the flexibility and the ability to do so while still maintaining a business model and be successful. Obviously not as successful as a full-time. I mean, it's still full-time, but not as, a 9-to-5 job would limit that, and therefore you wouldn't enjoy life as much. Kind of the philosophy, you work hard, you play hard. And, I've always enjoyed that about this. And my wife gave us the opportunity for her to go back to school and actually go pursue a different career and get out of sales and become a nurse.
Yes,
which she absolutely loves. And it's been great with our family. It's I'm kind of like married to a fireman now. So
that's awesome. Okay, you're off a couple days, you're on. I always said if I could go back to school, I studied PR and marketing. If I could go back, I would have go be a nurse. And my husband's like, it's not too late. And I'm like, I feel like I'm kind of just, I like what I do. It's good. But I always felt like that is such a great career. And especially being a parent, because you can work the off hours and kind of like with what you do as well, you get that flexibility to be like, no, I want to take my kids to school. I want to pick them up. I want to be able to do those things, but still have a career. So it sounds like you guys both kind of have the best of both worlds.
It has. It's really worked out since she's done it because now she's, she works 12. So it's 3 days on.
That's great. 4
days off.
Although I'm sure by that third day, she's like, this is not great.
Oh, and especially when she does a fourth and then it's like, okay, we need a day of recovery.
Yeah. You're like, no overtime. You're good. So how long have you been in the industry for?
I was just looking that up. I believe I've been in it 17 years now. So.
If you have to look it up, you're like, it's a long time. It's been a long time.
It's like, how old are you now? No. No, and it's been a great ride. Really, I enjoy it. I was able to get into it during I came in during the refinance boom of the early 2000s. And, money was just falling at you. It was,
right.
Pull a credit report. Oh, you're over 700. Great. Here's a loan.
Wow. Don't even need to verify anything.
No documentation. You still work, right? Okay, perfect. Thanks.
How much do you make? Okay, sounds good.
I always took it further than that, but that's how easy it was,
right.
Which obviously led to
the big meltdown.
Yes.
The big crash.
Yeah. So I've seen the highs, seen the lows, and been riding a good wave for quite a while now.
Yeah, right now it seems like, every few months I'm like, are we still going to be doing good? Are we still good? And it's just, we're still going. So I can't complain.
Yeah.
So how many of those years have you been at Mason-McDuffie?
So I came over to Mason-McDuffie just over 6 years ago.
Okay.
Started out in the business. Actually, I used to work for a little company called Sleep Train.
Yeah. Who's that?
Wonderful experience there. A lot of what I learned in my career and my life, I've learned from being a part of that team and working underneath and working with the people that were there and made them such a successful business. And so I've carried on a lot of that into my business as well. And it's what has helped make me successful and stay happy.
Yeah. Not overwork, don't work too much. It's a balance, right? We all try to find that balance of like being able to be with our family and not take work home or not be super stressed out when you get home. And that's, for my husband and I, we talk about that all the time. We want to make sure that our kids, we want them to know how hard we work, but we don't want them to feel that, you know? Like, I don't want to be stressed out coming home and seeing my kids. No way.
Right.
It's not worth it.
And that was one of the joys of working there. And so when coming over to the mortgage industry, it was different. You know, it was, I went to a business where it was very high paced, high volume, really a crash course into the business. And, you know, started out closing anywhere from 18 to 26 loans a month.
Oh my gosh.
Hey, welcome to the mortgage business.
Wow.
You're not going to sleep. You're not going to eat.
Did you really have to like go out and get that business, or just kind of fell into your lap and at that time?
It fell into our lap. I worked in a division called portfolio retention. And so I actually worked nationwide.
Oh, okay.
Even though we were here in Sacramento, I would call out to existing customers and help them refinance when they wanted to refinance. And so I took the mentality, everybody was working California. So I said, well, you know, I'm going to start doing these tougher states. You know, New York has bureaus, and Maine and Massachusetts has attorney laws, and Texas is a brick and mortar state. And so I would go to these different states where everybody else didn't want to touch them, and really started building my business there. Utah was one that I went into. I think it was the only guy who could get a license there.
Wow.
No offense to anybody else,
Yeah.
but so in doing so, then everybody started throwing me all their Utah leads and things like that.
We don't want to do it. We're not even licensed there. Here you go.
Correct. And so I learned, so I sort of, you know, got in and learned the business there. I learned the good and I learned the bad. The company was one of the ones that unfortunately imploded, and there were a lot of things that went on there.
I wonder which one it is. No.
We're not going to throw any
you don't have
names
to
out
say
there.
it, but it's funny because I hear this story a little, you know, different, but from a lot of people, and it's usually there's like maybe 4 or 5 companies that it's always the same ones, and a lot of those people are back into the industry. And the good news is you learn from what was wrong, and now we do what's right. And it's not that anybody did it intentionally wrong. It was just what the rules were back then, right?
Well, right. I mean, it's a lot of people did do it wrong, but we won't.
Right.
But, you know, for like myself and quite a few other people I worked and surrounded myself with at that time, we did it the right way.
Right.
And you know, I learned a lot. I learned credit repair. I mean, I actually did a little venture. I was actually starting up a credit repair business with a friend of mine who was going to be an attorney. So I learned, I mean, I didn't even know what a 700 credit score was when I started in this business. Wow. If you had over a 640, I said, go talk to somebody else.
Wow. It's a good problem to have.
So I learned a lot. I learned that. And I worked with some great people and helped a lot of people kind of work themselves out of bankruptcy and back to positions. And it was amazing to hear how many people, I mean, there were professors from universities. There were businesses. There's a certain little motorcycle company that came out of Southern California that I was lucky enough to help them secure a loan for what they wanted to do. So a lot of neat things came out of that too. And I still have folks that call me from Massachusetts and different places.
I was going to ask, are you still licensed in all those states?
I'm not licensed there anymore. My company is, but I'm not personally, so I can start them and take them and then hand them off. But, you know, I'll still get the phone calls from certain loan officers in different states.
Hey, that means you did a good job.
Yeah. And so that's good. And then from there, I spent a couple years there. It was tough. We worked 6 days a week, you know, lots of dialing for dollars, as I call it. And then my daughter was born, and I called it the intervention. My wife and my mother sat me down, and they said, hey, you're working way too hard.
You work too much. You're like, huh, okay.
Like, what do you mean? And they're like, oh, you're kind of yelling at your processor in your sleep.
Yeah. Oh, gosh. You're like, I think that's when you know you have a problem. You're working too much.
So I took a leap of faith and changed, and came out and helped open up a small shop out in Elk Grove with a mutual person we talked about.
Yep.
And then another friend of mine from college was opening up a shop at the same time, which was much closer to my home. I said, well, okay, that's, again, having a newborn daughter, I want to be home.
Right.
And he gave me the flexibility that I said, hey, I'm not going to be a hardcore. I'm not going to do what I've been doing for the last few years. Right. I want to be dad for a little bit.
Yeah, take a step back.
And he was happy with me to be able to do that. And so I worked a few years with them, and it was great.
And then from there, you went to Mason-McDuffie?
No, and then from there I went to a company called First Priority Financial.
That's right. You did tell me
So
that.
what happened is with our shop we were working at the time, mortgage meltdown happened. Everybody was going away, so the entire market shifted from conventional to FHA financing.
Mm-hmm.
And for the smaller shops, it was a little tougher to get what we called full legal to be able to do FHA loans, and so you just had to jump and go to a bigger company and take the security of, okay, I need benefits again. Plus, this is at the time where my wife wanted to go back to school and become a nurse. So
no
therefore,
pressure.
You know, it was okay. You had your fun for, you know, a couple of years without having the medical, the dental, and things like that. It's time for you to get back under that W-2 lifestyle. And
right.
And First Priority was a great company.
And did they get bought out, or they're still around?
They eventually got bought out by a larger company, Caliber. And so I'd stayed with them, and culture changes when places buy them out. And so at that time, it's one of those, I had always seen Mason-McDuffie and some of the gentlemen who work over there, Dave Hurd, Scott Short.
Been there forever.
And were honestly kicking my teeth in the markets I kept trying to capture from them. I mean, Dave Hurd is a Davisite, he's like the guy there.
Everyone knows him.
Yeah, Rotary, you know, alum, fraternity guy. He's there in Davis, and so it's Davis is a really tight.
I've tried to get business there, and I'm like, they pretty much are like, yeah, you don't live here, okay, bye. They're nice, but they're kind of like, yeah, you're not from here, yeah, good luck.
So you know, I could barely ever get a deal sneak by in Davis, and then of course Scott Short was doing a lot of first time home buyer stuff, which was the one thing that I couldn't do as fast at the company I was with. So when the time came, it was just, you know, it was a good party in the way. As I just said, if you can't beat them, join them mentality. So over to Mason-McDuffie I came.
Here. Yeah. So. And 6 years later, here you are, still there.
Here I am, still there. And, you know, still a good company. I mean, still a great company, actually. I mean, we're constantly evolving, and that's what I love about it is one of the big reasons I liked First Priority is they were very technologically, is that right?
Yeah,
advanced. And always looking for that, not always chasing something, but always looking to stay ahead of the curve and making sure they gave us the tools we would need to be able to advance ourselves.
Right. Because, I mean, we all know it's moving at a very fast pace.
Right. And same thing with Mason-McDuffie, and especially now, the last 2 years, we've really been ramping up. We have a great CRM. We have some great tools, things that we send out to clients that are practically proprietary. That really differentiate us, and it makes my job a whole lot easier.
So as a loan officer, that's what people are looking for, something that makes your job easier so that you can do your job as a loan officer and focus on bringing in business and helping those people purchase houses, but not be so wrapped up in a deal that you're not able to do your actual job, you know? Because I hear that from people constantly. They're like, I'd love to grow my business, but because of the company I'm at, I have to babysit every single file every step of the way. So it you know, kind of puts a roadblock up. You can only do X amount of business if you have to babysit every file. So It's refreshing to hear that companies are, you know, technology is huge and it's not going anywhere. I think it's only going to continue to progress and get even more crazy. I mean, we have self-driving cars and stuff. Like, I mean, hello, it's 2021. It's good that companies are getting with the times because you don't hear that very often. I think a lot of times I've actually heard somebody say this, like most mortgage companies are like 10 and 15 years behind the technology curve.
Correct.
It's an older generation that does loans. Not a lot of younger blood is coming into this industry. So it's almost, they're intimidated to say, we want to put out more technology because some of the people who've been in it for 20, 30 years, they're like, well, we don't want any of that new stuff, you know? So I see that a lot.
Yeah. And it's, you know, speaking of that note, it's the same thing with like the appraisal industry right now is just crushed. Mm-hmm. It is, I mean, that's the biggest, one of the largest problems loan officers are saying is, you know, we can't get appraisals done as fast or as efficient or they're costing more or correctly. Yeah. And it's, I mean, anytime you rush something, there's more opportunities for mistakes and everybody's apt to make mistakes.
Right. We're human.
So, I mean, with that being said, it passes on to that. And it's kind of correct. I mean, it's, well, I won't go down this path, but I think that, yes, appraisers need to be professionals. They need to be trained properly. I think that they are requiring them to be too rigorous to the point where the return on investment for somebody to become an appraiser and get into the business it's tough.
Yeah.
It's daunting.
Yeah, it's not there. And it's, I mean, right now we're at record numbers of homes selling. And it's like, I hear the same thing across the board, especially up in like the mountain areas. People are just like impossible to get appraisers out there. There's just, it's
21
crazy.
days.
Yeah, it's
You're
crazy.
like, oh, you wrote a 30-day escrow. Well, we're not going to get an appraiser out there for 21 of those days.
And then what, after you get an appraisal, how much, you need a little bit more time to get everything done. Yeah, it's crazy. I've heard that across the board from a lot of people. I don't think that's not a company thing. I think that's just an overall problem in the industry.
Right. It's rural, and gosh, with the fires and things that are going on, it's making it even harder and precarious. And I understand it too. If you're an appraiser and you say, okay, I have 3 homes I can go see in one day, or I can go drive out to Georgetown and do one.
Right. Why would I just stay in
You're
Sacramento?
either going to charge $1,500 to make up for the fact that you're losing out on those other deals. And so we're learning, and you just prepare people that this is the cost of doing business right now, and unfortunately, it's just where.
And if people want the house bad enough, they'll make it work, right? A couple extra $100 isn't gonna kill the deal. But I've heard that kind of across the board. I know when we were talking a little bit earlier, you said you did first-time home buyers. Do you specialize in working with first-time home buyers? Or you kind of, because I know we talked about, or is that like a niche that you do, or?
I do a lot. There's another guy in my office there's some different programs that are very specialized, and that's the nice thing about our company, or at least in my office, we all feed off of each other.
Yeah,
so
it's huge.
Yes, I do. And these guys make me look a lot better than I am sometimes, because they're always changing these first-time home buyer guidelines. And it's, okay, we're going to be a hard stop at 43%, or maybe we're going to be a hard stop at 44%. And these things are always changing. So it's always good to be able to bounce things off of each other and really be able to service our clients the best we can. But no, we've always been a preferred lender with most of the down payment assistance programs and entities that offer them. A lot of them have dried up, unfortunately, like the city grants and programs, things like that. I mean, obviously with lack of funding, they're just not there anymore. But we're starting to see some more stuff come back. So
it's good for first-time home buyers.
It is. Now the thing is, and the market is starting to slow. So now these first-time home buyers aren't getting. I say, well, it's seasonal.
Yeah.
It always slows down this time of year.
I know people
forget that. Now all of these people that have been out there all summer long with these, getting beat out with their down payment assistance funds because somebody comes in with cash.
Seriously, yeah.
Or, as a seller, if I'm looking at 2 people going, you can tell me how great this down payment assistance program is, but this guy has 40% down.
Right. And it's almost a no-brainer.
And they're going to waive their appraisal contingencies. They're going to do this. They're going to do that. They just get beat out.
Right.
So it's really nice. You'd ask me, are things slowing down? And what I'm seeing is a lot of these folks that have been out running around for a while are finally getting into homes that.
So it's not a bad thing.
I
think it's almost that breath of fresh air we all needed. Like, I don't know, where we live, it must be like I'm out in West Roseville. And it must just be like that area because, so we've always said my sister-in-law and brother-in-law live about 5 minutes from us, but we're in 2 different school districts. And we would love if my nephew and my daughter could be in the same school district. We're like, you should just buy a house closer to us. So I'll like find a house, gone the next day. And this is like recently, literally like I got a mailer and I'm like, oh my gosh, look at this house. And I look online, it says pending. I'm like, why'd you even send out the mailer? So I think you're right. Like it is slowing, but I think there's still those pocket areas, like the more sought after, Sacramento, Roseville, Rockland, like where people want to be. It's very hard still right now. And I think when people say we've slowed, it's like, whoa. Well, we're not slow. It's just that maybe it's a little bit easier. There's not 20 offers. There's only 10.
Right. And that's what I'm hearing from a lot of my agents I've talked to as well. It's, I'm getting 3 to 5 offers now instead of 16 to 20.
Way less overwhelming, I would imagine, as a listing agent too. Like,
yeah. It's getting back to normal.
Right. It's not a bad thing. I remember probably about 2 years ago, this loan officer stood up at a PCAR meeting and he's like, we're going to slow down. Rates are going to go up. And he came back maybe a year or 2 later and was like, I'm biting my tongue because I think we all thought, well, rates can't get any lower. And then they just kept going lower and kept going lower and kept going lower. And so you're kind of like, when is this going to calm down? Because then it created this frenzy and people were like, oh my gosh, we have to like get out and do it. But then what are you going to buy? There's nothing to buy.
Correct. There's no inventory.
Right. Even us as like my husband and I were like, okay, let's say we want to move up. We sell our house. Where do we go? Because there's nothing. A move up to us would be the house that we have currently, price wise, because we bought it X amount of years ago, right?
Right.
So it created this like perfect storm almost. So hopefully we're kind of on the mend from that.
It is. Well, we were hit with the pandemic in the middle of it too, and
right.
It's things changed and people really focused on their homes and their families. And, hey, maybe we should move. And so everybody said, well, I'm not going to the office. Let's start looking for houses.
Right. And
or
I need a home office, right? I need a bigger house.
Yeah, I'm either going to, I either need that home office or 2 home offices if both of you are
Working
able
from
to
home.
do that.
Yeah.
So it was either move up or build on. And so a lot of people just obviously moved.
Yeah. A lot of people, although it seems like as fast as they were moving, people were coming in because that's how it felt for us. So anyways, in our neighborhood, it was like just the turnover. You're like, okay, so-and-so moved and then now so-and-so's here. Like, it's just crazy. So I'll welcome a little bit of calmness because it's been a crazy year or two.
For sure.
So now you've been in the industry for, 15 plus years. And obviously that's like an amazing career because a lot of people in this industry, when the economy crashed, they got out of it, maybe came back in, maybe didn't. I mean, you kind of hear it all. If you could go back, like right when you started, what would you tell yourself now that you would be like, I wish I would have known this? Like, or somebody brand new getting into this industry. Like, what is something that you wish you would have known?
I would say, 1, don't be afraid to go out there and put yourself out there.
Mm-hmm.
Be comfortable. If you don't know everything, that's okay. Nobody does.
Mm-hmm.
Nobody knows everything.
Yeah.
But as long as you surround yourself with some good people that can help you, then you can go out there and market yourself and get the people in, and then you'll have that support behind you. As long as you surround yourself with a good company and good support and good people, then go ahead and do that. Get out there and do that. And I was even a bit timid in doing that.
Yeah.
Again, we'll take out my first couple of years where I was just dialing on the phone because that's a whole different ballgame.
That one you kind of have to have no fear. Like,
Eventually, it's just, here we go.
Yeah.
But there was also a level of comfort to go, well, these guys are in Massachusetts, or, these guys are here.
They don't know who I am.
Right. And social media and things like that were really just starting.
Mm-hmm.
So there wasn't that ease when I started into the business of, it was there, we could see each other like, oh, hey, there's MySpace. And
Right.
this thing called Facebook.
Yeah. What is this new thing? This new app?
I just dated myself.
Yeah.
Anyways,
Hey, I remember that too.
So that, now being out there and doing these things, I would encourage anybody and everybody. I see a lot of the up-and-comers and younger people in the industry, not necessarily younger in age, but the folks that are just not afraid to just be honest and show who they are. Sometimes people go too far, but in the most part, it's be you, put yourself out there. And that's what when I started, I should have pushed myself harder to be out in front of people's faces and doing more things, I guess, or even when I was at events to be a little bit more open.
Yeah.
Now it would be push yourself to do all the social media that you're comfortable with. If you're good at TikTok away. If you're good at...
Yeah, we had a loan officer on here like 2 episodes ago, and he and his team, they do TikToks, and they are hilarious. And it's like amazing. I'm like, I couldn't believe that. I didn't ask, like, do you get business from it? But I'm sure. It's just putting yourself out there, and that's who they are. He's like, take it or leave it. This is who I am.
Oh, there's a realtor I follow all the time that makes these great memes out there.
Yeah.
And that's his thing. And I go, I love them.
Yeah. It's hilarious.
And it's great for marketing because, of course, then what do I want to do? I want to take it, swipe it, put it onto my thing because I think it's just so darn funny, which there in turn I just advertise for him.
Right.
So, I'm not as huge on TikTok or Snapchat, but, I may break through the barrier soon enough. But, it's one of those things that whatever it is, be comfortable with it and put yourself out there. My big claim to fame recently was just with the COVID and everything like that, I kind of did a grassroots mentality where I just really wanted to support my friends that were in the restaurant business and small businesses and shops like that. And I just did it I honestly didn't think to do it to make money.
Right.
I was just like, I don't have anything else going on. COVID's cutting here. I'm like, I'm going to try and promote these folks. Don't want anything in return. But in return, I ended up getting a ton of referral business that I didn't even think wasn't even realizing was going to be there. And so going back to that, be honest, be who you are, and, market yourself to who and what you are. If you're in a church group, market your church group. If you're in a fraternity, or if you're in a this or a chamber or whatever, focus your energies there and
make it authentic. I think that's COVID has taught a lot of us that. I used to wear slacks and black pants and very professional, and I'm like, that's not me. I'm 29 years old. I don't need to wear a pantsuit. Like, that's just not my style. And coming to Sky, my boss is like, oh, whatever, just dress whatever you want to do, and it's like, this is who I am. This, take it or leave it. I'm not the person that's going to be in a button down suit. Like, it's just not me. And I think that's the kind of a good thing about COVID is a lot of people came out of it saying like, yeah, I'm going to be more authentic to who I am. And we actually had another real estate agent on here, and that was kind of her like breakthrough was, she's like, I'm just going to be who I am. And if you don't like it, you don't need to work with me. And she's like, lives out in the country. She's like, sometimes I'm going to come show up to my listing appointment with horse poop on my boot. And that's just who I am. Like, take it or leave it. She works with people who want to live out in the country. This is who she is. And I always appreciate that, because I think we were kind of trained 20 plus years ago that we do need to be in a suit and a tie and dressed to the nines and all these things. And it's refreshing to see people like, they're like, no, we're not going to do that anymore. We're comfortable wearing, Vans and a pair of shorts and a polo. Like, those are my kind of people. Yeah. I mean, you can't see. No, I'm just kidding. But seriously, it's refreshing. And it's like, I'm happy to see it. I welcome it. Because I remember I'd go to all these meetings and people were always just dressed to the nines and just prim and proper and perfect. And I'm like, this can't be real, right? Like,
well, and there's a time and a place, and I think Sacramento was a different dynamic than
very true.
Different cultures. And it was the same thing when I started in the industry. I always wore a shirt and tie,
right,
suit. And I went down to I remember I went down to visit some folks in Napa, which is where I grew up. And we sat down to do lunch, and they looked at me and they go, "You're making me uncomfortable, Matt.
Yeah.
Loosen up a little bit
you're
here."
Good. We're all humans.
And that was actually kind of the funny thing when I went to First Priority is I walked into First Priority, and here comes the owners of this company, and they're wearing cargo shorts and Hawaiian shirts and flip-flops. And I looked at these guys, and here I am in my suit and tie.
Right. And they're like, you're good. You don't have to dress like that. And it's true. And I think it speaks volumes to like, who we are as people. It's like, I think it's intimidating when people dress like, I mean, don't get me wrong, there's a time and place for it. But when people are dressed like super to the nines, you're kind of like, it's intimidating, especially when you are trying to help people buy a first time home. They're like, who are you? Like, we're just over here buying this little home and you come rolling up looking all perfect. And I think it just brings, a more like just human aspect to this world, to this job, because we're all humans, right? We don't need to be like that.
Well, and that's where in lending, and particularly like in real estate with all of the technology coming in and things like that, if you're not personable and you're not pure and honest, mm-hmm. and you don't show that, then why wouldn't they just go and click on a button?
Right. Very true. I mean, because who knows in the next 10 years what's going to happen. Yeah. We see it in insurance constantly. I mean, you can literally click a button and get a quote in 2 minutes. I mean, is it legitimate? Probably not. Just like lending, you can go and click a button and put a couple facts in and boom, there you go. Here's your 2% interest rate, but it's going to cost you $12,000. Right. And it's so, I think it's important that we show that side of, we're still here. We're human. We have insurance just like you. We have a mortgage just like you versus the 1-800 call center type place.
Yeah.
Yeah. Well, thanks for coming on the show. I really appreciate it.
My pleasure.
I just kind of wanted you to get on here, share how long you've been in the industry and everything, because it is refreshing to meet people who've been in it for a long time but are still like sharp, like it is refreshing. Hopefully that doesn't offend anybody.
No.
But you meet people who've been in it for 30 plus years and they want nothing to do with the other, like, I'm retiring in a couple years. And you're like, okay. So it's refreshing having somebody who's been in it a while, but you're still like sharp. You're doing all the right things. So why don't you share what's the best way to get a hold of you if people who are listening would like to get a hold of you?
You can always visit my website. Work for Mason-McDuffie Mortgage Corporation, of course. My domain is my name, mattemiller.com. So that's MatteMiller.com. Call me. I give my cell phone out. It's 916-548-9278. And I don't pick up, I'll get right back to you.
Always texting too.
And you can always text me too.
I know when I got your text, I was like, hey, how'd you get, what? I didn't, and it came up, it was so cool. It came up as you, but I didn't have you saved in my phone. I was like, gosh, I love technology.
Technology.
It's so awesome.
And that's the thing. You got to roll with it or you're going to get rolled by it.
Oh, 100%. Well, thanks for coming on and thanks for everybody listening. We look forward to the next one and really excited to have you here.
And of course, for great insurance rates.
Oh, thank you. You're awesome. Bye.
Bye.